Mr. Srinivas Reddy, Managing Director at MTAR Technologies. Uh, uh, Mr. Reddy, you're at the forefront of nuclear technology. Within the small cap, mid cap basket, we are very well placed to possibly capture that opportunity. Talk to us about size, scale, and how quickly will that play out in your opinion once this proposal is passed and execution starts to pick up.
Yeah, absolutely. The Atomic Energy Act has to be amended. That's the most important thing. This is the first of the kind in India that we're looking at private sector participation. It's definitely very important to achieve what we want to achieve, 100 gigawatt kind of a situation by 2047. It'll not only speed up the whole process, but also the modernization. And this is an opportunity where we'll have in the areas of atomic minerals, setting up reactors, additional infrastructure required for that. So this is a opportunity which will really uh, enhance or speed up the entire implementation process of the nuclear energy or the clean energy that we are looking at. So let's see how long will it take for the act to be amended in the parliament and then the implementation process. So it's a very important decision to be taken by the government of India, and I hope they do it at the earliest.
But Mr. Reddy, just trying to understand, do you think these would be long gestation orders whenever they come through?
Yeah, see, basically any nuclear reactor to implement, whether it is 220 megawatts or 700, what we call as even the small modular reactors, see, they all projects would definitely, the implementation time is anywhere between 4 to 5 years for any given project or any given reactors. But it can be done much faster with the involvement of the private sector, speeding up the whole actions to be taken. That's the idea behind this, why the government is pushing for privatization on this area, which is a very good move. And probably we can save a lot of time in ensuring that we reach our goal of 100 gigawatts in the nuclear sector.
And Mr. Reddy, within the value chain, you're very well placed to give us that understanding. Within the value chain, how large is the opportunity size, and how much of that opportunity size belongs to the sectors or cohorts that you are placed in? Give us a take with regard to that.
No, we are primarily in building of the core of the reactor, the nuclear, what we call as the nuclear island. So I cannot just throw numbers at this point of time, but the first step is to get the act amended, and then we look at the opportunities and the time and all that. It's a huge opportunity. There is absolutely no doubt about that. But let's talk about all that when things happen, the act gets amended in the parliament.
And with regard to the latest order win, sir, give us some texture around what this order win entails. What does it bring to you, and what's the kind of margin, etc., execution timeline, etc., with regard to this order?
No, we are receiving a lot of orders in the nuclear sector. As I said earlier, we are expecting for Kaiga 5 and 6, the new reactors, close to about 500 crores of orders. The orders are coming in continuously. And then we'll be getting furthermore orders for refurbishment of reactors. So all this is in the pipeline over the next 1-2 months. So as I said, our plate is full in terms of the orders for the nuclear reactors, and further reactors are as well coming in. We have enough infrastructure and the capacities to handle this kind of requirements. So it's a good sign overall that we don't have this cyclical events of up and downs in the past as we had, but moving forward, we'll have an exponential growth in this segment.
Apologies, Mr. Reddy, if you've not got my question fully. You've won 2 orders this month. You've won a 194 crore order, which is part of a 504 crore KEGA orders, as you've disclosed them. You've also won another 370 crore rupee order. Give us a take with regard, or some flavor, because I understand that your clients are confidential and you're not able to reveal the names of your clients, but give us some texture around what these orders are about, and what the margins could be on the orders, because your margins tend to be a bit choppy. So I'm trying to get a sense of how these orders play out timeline wise, margin wise.
See, timeline-wise, you're talking about the 504 crores for the nuclear energy segment, and the 370 crores what you're talking about is towards the fuel cell segment. So these are the orders we're continuously getting right now in big numbers. And the timelines, as I said, for the 500 crores and odd would be between 2.5 to 3 years. We have to execute all those orders. And as far as the fuel cells are concerned, is within a year. So that's how it works.
Mr. Reddy, the margins which have come off sharply. So FY21, your margins were 34%. Currently, you're sitting at anything between 17 to 19% in the last 3 financial years. Is this the run rate at which your margins will now go? How comfortable are you guiding for this 17 to 20% kind of margin range?
See, we have guided around 20 to 21% for this financial year. That's what we have said. So then moving forward, the kind of order book we have with the operating leverage that we have, our margins will definitely improve further for the next financial year as well. So it will be on the uptrend, but not on the lower trend. That's how it's going to be.
And which high margin orders you think will drive this EBITDA recovery, Mr. Reddy?
One is the operating leverage because of the high fuel cell orders that we have. That will drive the EBITDA margin higher. Secondly, the higher nuclear energy orders and the aerospace orders that we are doing, which will drive the margins higher. So overall, the revenues also would be much larger than what we have been doing in the past.
And sir, very quickly, with regard to Forex fluctuations, I have a credit rating report which says that 78% of your exports are unhedged. And I come to this question because nearly 80% of your top line comes from exports. So trying to get a sense, this basket of unhedged exports, is that at all a concern? Are you planning to reverse that at all? Or am I incorrect in my understanding?
No, absolutely not, because we don't have to hedge because we have our imports are far less than exports, right? I mean, our export earnings are much higher. And obviously, we'll gain from this. The way the dollar is moving, the company will gain from this. We have expected this. So I don't think we have any issue with this. We are in a positive note as far as this is concerned.
But if the dollar were to reverse, it could also mean that there is a risk, right? There's a real risk.
We have considered that risk already in our pricing structure and everything. So we have no issues with that.
Okay, understood. And with regard to any concerns with regard to customer concentration, are you looking to diversify your customer set at all?
We have been diversifying a lot. I mean, if you look at the absolute numbers, we are doing very well in aerospace, the nuclear energy, the space sector. We are moving into oil and gas. So just because the fuel cell is doing extremely well because of the AI data centers, that doesn't mean that we are not diversifying. We are diversifying very well in all the other sectors, and each of those will be a great growth engines moving forward. That has been our investment over the last 2 years. We have spent enough money on the management bandwidth, increasing the management bandwidth, infrastructure to address this issue, and we have already done that. So that's what you can see those results moving forward as well.
Two pieces, sir. One is with regard to your working capital days. They've risen to over 220 days, if I understand it right. Where does it stabilize? Does it come off? Give us some color on that. Also, your debt to equity has gone up as a result, likely. Any chances that will change either?
Yeah, working capital days should reduce. That's what we're expecting by end of the year to be around 200 days. That's what we're looking at. And next year moving forward, we're also working on reducing further number of days over the next financial year. And our debt is very marginal. If you look at our debt compared to what overall situation, the ratios, we are well within the range what we want it to be. And the debt further might come down in the future based on our earnings. And most of the investments we are doing are through internal accruals and very partial amount of debt.
Right. Okay, Mr. Reddy, great having you on the show today. Thank you so much for your time.
Thank you so much.
Thank you. Okay, that's MTAR Tech.